105.7 Light FM. Appreciate you being here, really and truly do. I'm Morning Dave. We're at 8:42 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
Yeah, please do. It's time to check in on money and see what's really happening to your money there so you know what to ask your tax or legal advisor. Phillip Statler from Statler Financial Services in downtown Sebring is on the phone. Good morning, sir. It's good to hear your voice today.
Good morning, Dave. Good to be here on this short week. Got eye appointment yesterday, so eyes all good. Just gotta wait a couple more weeks, months for the vision to come back totally. So, but good news there as we continue to head into the last month of this quarter.
Absolutely. Before we went on the air, I forgot to ask how things went. I'm really glad to hear progress continues with that front. It's an interesting day going on. Backing up to yesterday, just so you know from whence we began, the blue chips lost a little bit yesterday, down 24.5. S&P 500 up by almost 33. NASDAQ up by over 218. Blue chips off, the other two indexes up. It had to be something tech. And yeah, Google just absolutely skyrocketed. They were up 9.1% because they got a partnership with Apple. They pay Apple to make their iPhones default to Google search when you do a search on your Apple phone. Apple went up 3.8%. Peace in the Valley meant the tech sector went crazy yesterday, but everything else was just waiting to see what was going to go on for the next 3 days because we started out the employment floodgates yesterday. What was about 10 o'clock? The JOLTS report came out. I see a dip in the blue chips about then, and I'm thinking that probably was caused it because the first of the employment-related reports for the week came out, the job openings and labor turnover survey. Step number one, job openings in July. This is old data, but it just confirms what we already knew, fell to a 10-month low. But this really knocked my socks off, Phillip. For the first time since the pandemic, the number of open jobs in this country is below the number of people looking for jobs. And that's the first time since back in 2020 that we've had that number. Kind of makes you drop your false teeth, don't it?
That's been it's been quite the time since that's happened. And I'm looking at the number of job openings, and for a long time those numbers were up at the 10 to 11 million mark, and now we're down to 7.2 million. That's a substantial decline in job openings over the last 5 years.
And for the longest time, you and I were comparing openings and the number of people looking for jobs, and there was like 3, 4, 5, 6, 7 to 1 ratios between the number of people looking or the number of jobs that were open and the number of people that were actually looking. That's starting to get turned on its ear now, which kind of gives you the picture that, well, the economists are right on one thing anyway. The employment market is definitely slowing down, and there's a possibility we overshot by a little bit.
It could very well be. The economy is starting to slow down a little bit, and that's indicative of what we're seeing here.
Yeah, well, you add the fact in, too, that, with the uncertainty out there, and heaven knows the mainstream press has been ballyhooing, yeah, we know it's coming. There's going to be a big inflation spike with all these tariffs. We just know it's coming. It just hasn't happened yet. You can't hear that too long without being a business person saying, I'm going to hold off on hiring any more people for a little while, and that's always a contributing factor. Kind of got that out of the ADP report. That's the morning data dump this morning, the big payroll service. One of my analysts was expecting 70,000 new private sector jobs added, which wouldn't have exactly been a number to write home about to begin with, but then we undershot that, and we only added 54,000 new private sector jobs last month. So one more fly into the ointment to tell us that the employment sector is definitely slowing down at this moment in time.
It is, Dave, and let's just compare that number to July's number, which was 106,000. So almost half of what it was in July. So not the best of news there when it comes to new hires.
Absolutely. We'll get our confirmations on just how greasy it is or whether or not all these other numbers were wrong tomorrow when we get the fabled Bureau of Labor Statistics numbers. We'll find out what the unemployment rate officially is for the month and how many total jobs we added into the economy. I've got to remind everybody, this goes mid-month to mid-month. The survey will run basically from July 15th to August 15th, if I remember correctly. But given all the the herky jerkiness of the numbers over the last few months and changes at the top, I kind of wonder whether tomorrow's number is really going to be the market mover that we probably would expect it to be if we trusted the numbers.
Well, it may depend on the revisions, Dave. What those
Yeah.
revisions look like, and how impactful they are. I know I was reading an article that basically was, touting interest rate cuts and what it would take to get a 50 basis points or a 0.5% cut in interest rates. And one thing they said was there'd have to be some major numbers, that come through. Plus, the unemployment number needs to hit 4.4%. The expectation right now is 4.3. And they were just looking at a quarter of a point versus a half a point. What's it going to take to make sure we get a half a point?
You mean somebody's even thinking about a half a point being possible? I would think that would take absolute Armageddon to make the Fed move a half a point.
Well, I think that's what they were trying to line up. They're trying to line up the statistical facts that it is Armageddon, in the article I was reading. But the other thing we didn't talk about, Dave, was the U.S. trade deficit. That came out about 8:30 or this morning, and it's gone up substantially. The trade deficit last reading in June was $59.1 billion. Now the July reading was $78.3 billion trade
Holy
deficit. So yeah, that's a
crapola! They were
huge.
expecting 60. Yeah, they were expecting 62.6. So that's like overshooting. We can't stop spending money, even if it's on tariffed goods in from China, right?
Yeah. So well, and that's a trade deficit. So that's so we'll see how that plays out and see how they start playing nice with other countries or other countries
I
start
would
playing nice with us.
Yeah, I would almost think the fact that we're continuing to spend more money overseas than we are selling overseas, I'd almost consider that backhanded good news. Number one, with the Trump administration ballyhooing their tariff income, which we can get to in a couple of seconds, being at risk. But, we're still spending money even in the face of tariffed goods coming in. In a backhanded fashion, a trade deficit is never good, but in this case, it might indicate an indication at the very least that, okay, fine, they aren't killing our trade with other countries, are they?
Yeah, doesn't look like it anyway.
Speaking of tariffs, we settled up one big court case with the Google thing yesterday, and that was good news. We are still in court with President Trump asking the Supreme Court for an expedited hearing on that lawsuit where one federal judge, anyway, said that he couldn't impose tariffs, and consequently the risk of possibility of having the federal government have to refund all the money that we've collected in additional tariffs since April 1st. That's still in transit, and it's definitely tamping down any optimism in the market at the moment, because that would certainly not be good for the federal budget, would it?
No, it wouldn't, Dave. Sorry, I had my double ears going here. I clicked onto something that started playing. No, it wouldn't be good at all. So we'll continue to, we just, the deficit, not just the trade deficit, but our overall deficit, spending deficit, is going to be an issue. And I read this morning, I didn't realize this was coming up either. The end of this month, September, we're going to be fighting another government shutdown. If they can't come to some kind of a spending bill agreement, that could play havoc on our markets.
It mostly certainly probably will. End of earnings season, I don't even want to think about that, because it always becomes the same doggy dance every time. We talk about it, we threaten to shut the government down, and then 2 hours before the deadline, they pass the extension, and everything ends up working out all right because, well, one of the requirements for going to Congress is you need a lobotomy before you can actually cast your first vote. So I've always made my politics pretty clear. I think both sides of the fence are full of hooey. A bunch of reports still trickling in, and one of them is one of the big ones that isn't a household name, but it swings a lot of weight. Salesforce reported, I gather.
Salesforce did report, and they are, for those who don't realize, it is what they call a CRM, which is a client management system where they manage all of their clients and that kind of stuff. And companies like mine will use Salesforce to be able to manage our data and our customer database. And so they are the big guys on the force when it comes to CRMs now. But I did read that they are as far as a tech firm, they have lagged behind every other tech firm this year on growth. They had an okay quarter. I mean, they beat on top and bottom line. However, as with most of the cases, their estimates for the quarter were lacking what the analysts expected. So they're trading down about 6% this morning. But the other thing that caught my eye about Salesforce is they may be one of the first companies I've seen that have come right out and said AI is helping. They have reduced their customer service base by 4,000 employees. That's from 9,000 down to 4,000. I'm sorry, from 9,000 to 5,000. They've eliminated 4,000 jobs on that front because AI has been able to come in and handle customer issues and been able to help customers accomplish whatever needs to be done on the customer service side. So, yeah.
I understand the investors are a little bit leery about that, the prospect of talking to a robot, huh?
Yeah, but I mean, they've evidently have gotten it down pretty good to be able to eliminate 4,000 jobs. So
yeah, I believe it. That's amazing.
Yeah, so that's pretty good on their front.
Well,
the other one, is big news. It's not necessarily big news, but hey, it hit the big news line was American Eagle, right? So when American Eagle came out with their big ad campaign, with the Sydney Sweeney ads, really hit the nail on the head and is really taking American Eagle up a couple stages. They beat on earnings substantially from 45 cents. They were expected at 21 cents a share. So good news there. Revenue was ahead of expectations, not killer, but still ahead. So American Eagle's just slamming it this morning, Dave. Down, they're up almost 25.2%.
Wow. I saw on one of the bulletin boards that Taylor Swift fans are saying, don't get so excited. It was because you signed Travis Kelce. The Swifties have to get into every conversation one way or the other, don't they? Anything else exciting before we tie the ribbons on it?
So I will say there is another company that we've never ever heard of, but it's called C3.ai. And it's just an indication of what's happening in the AI application area. So their whole deal is they help companies develop their AI platform to be able to utilize AI to the most fullest extent. Well, they missed wider. They had a bigger loss than expected. Revenue was below expectations. They've appointed a new CEO. It's not doing well. So they're down 14.5% this morning.
Geez, a new tech company loses money and they actually trade it down. The world has completely turned upside down, right? Resetting the table, the blue chips were off by a bit. The rest of the index is up by a bit on the strength of Google and Apple yesterday. 45 minutes before we opened this morning, what are we looking at?
It's a mixed bag this morning, Dave. The Dow is still trading down almost 0.1%. S&P 500 is up about 0.1%. And the NASDAQ 100 is up a little over 0.1%. Russell 2000 right now is up about 0.2. So mostly green to start the day. Silver coming off of a pretty high number, down 1.2%, but still trading at $41.55 an ounce right now. Same with gold. Gold coming off a all-time high, down a little over 0.7%. Right now, it's at $3,607 an ounce. And then crude oil heading down almost 1.2% this morning, sitting at $63.22 a barrel right now.
Yeah, go 63. I'm up for it. Feel like I'm cheering for a football score there. Overseas markets, the big numbers in the Asian Rim were off. Everybody else was up. The big ones, meaning Hong Kong and the mainland Chinese markets, they had a sell-off overnight, but everything else was pretty well up across the Asian Rim. Over in Europe, they're in pretty good humor this morning, except for France. Everybody's in green ink. Average European index up by about 0.33% halfway through the European trading day. Getting my retirement plans together takes an expert pair of eyes. I can feel better if I know I've got things in a row. How do I find my ducks in a row with you, Phillip?
David, give us a call at 863-382-0037 to schedule their core retirement analysis. That's you and I on the phone for 30 minutes to figure out if you're heading in the right direction. Give us a call. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here, you and me again tomorrow morning about the same time to tie the ribbons on the week and talk about that fabled unemployment report. I'll see you then, my friend.
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week is going well, even though it's short. Makes it better for the weekend. See you tomorrow. Bye now.